G'day, fellow crypto pioneers and dreamers. I'm Sash from CryPTOLOGIC, coming to you straight from the buzzing crypto hub of Melbourne, where the coffee's strong and the blockchain innovations are even stronger. You know, I didn't just stumble into this world, it pulled me in like a magnetic force back in the early days when Bitcoin was dismissed as an internet funny money. I remember my first mining coins on an old laptop, watching the network grow from a niche experiment to a global powerhouse that's challenging centuries old financial systems. Today, we stand on the brink of mass adoption. I am more convinced than ever that Bitcoin and cryptocurrency aren't just investments, they're the keys to unlocking true financial sovereignty. Picture this: a world where your money isn't controlled by banks or governments, where remittances flow instantly across borders without fees eating into your hard earned cash, and where everyday Aussies can build wealth that's resistant to inflation and economic turmoil. It's revolutionary, it's empowering, and it's happening right now. I believe in this tech's potential to level the playing field, to turn unbanked communities into thriving economies, and to inspire a new generation of innovators. If you're as fired up as I am about this transformative journey, hit that like button, subscribe, and let's dive deep into today's whirlwind of news, analysis, and insights. We've got a packed show from local Aussie developments to global market mayhem, so grab your coffee, settle in, and let's explore how these shifts could reshape your portfolio and our future. What's got you excited about crypto today? Drop it in the comments. I love hearing from you all. All right, my dearest crypto friends, before we tackle the serious stuff, let's inject some levity into this volatile world, because if crypto teaches us anything, it's to laugh through the dips. Here's not one, but three fresh crypto themed zingers are whipped up to kick off our vibe. First up, why did Bitcoin break up with Ethereum during the latest market crash? Because he needed some space to hodl through the tariffs. But turns out even smart contracts can't handle that kind of emotional baggage. Badum. Second, what's a crypto trader's favorite type of music? Pump and dump. It always hits those high notes before the bass drops. Boom. And third, why did the NFT go to therapy? It had too many unresolved layers and couldn't stop pixelating its feelings. Oh, God. Phew. If those didn't crack you up, share your best crypto pun in the comments. The funniest one gets a shout out in the next one. Remember, in this space, a good laugh is the best hedge against FUD. Let's start right here at home, because Australia's crypto landscape is evolving faster than a kangaroo on a caffeine high. Kicking off with big regulatory shakeup. The Treasury's exposure draft for the 2025 Treasury Laws Amendment Bill is a game changer, mandating Australian Financial Services Licenses, AFSL, for anyone dealing in digital assets, that's Bitcoin, Ethereum, NFTs, stablecoins, you name it. Penalties for non-compliance, a whopping 16.5 million or more in Australian dollars, folks. This isn't about crushing innovation. It's about building trust after global scandals like FTX's collapse, which left thousands in the lurch, or the local echoes of Celsius downfall where Aussies lost millions. Think of it as a safety net. Clearer custody rules mean your assets are segregated like in a traditional banking, reducing the risk of another Quadriga CX vanishing act where the founder died with the keys. But it's not all sticks, there's carrots too. Pension funds are warming up to Bitcoin big time, with regulators approving crypto allocations in superannuation portfolios. Imagine your retirement fund holding BTC alongside blue chip stocks. It's happening, with funds like Hostplus and Australian Super piloting small exposures that could grow to billions. This signals Bitcoin's maturation for speculative gamble to strategic asset, potentially stabilizing local markets during global dips. Speaking of adoption, get this, baby boomers are storming the gates. A recent report shows a 723% surge in boomer crypto investments, driven by FOMO from younger generation and easy on ramps. In Melbourne alone, workshops are packed with retirees learning about hardware wallets. Why? Inflation's biting super returns and Bitcoin's historical outperformance is hard to ignore. Market trends back it up. BTC is trading at around 169,000 today, down from last week's 186,000 peak, but showing on chain resilience with increasing holder addresses. Tech innovations? How does this all tie together for us Aussies? These regs could attract global talent to hubs like Melbourne, fostering jobs in fintech while protecting retail investors from rug pulls. But challenges remain. High penalties might deter small players, so balance is key. If you're a local, check out Blockchains Australia's events on or the ASIC's consumer guides links on cryptologic.com.au. What's your take on these changes? Are boomers the new whales? Comment below and let's discuss. Now, let's broaden the lens to the worldwide stage where crypto's drama unfolds like a blockbuster thriller. The headline grabber, Bitcoin's rollercoaster smashing an all-time high of $186,000 last Monday, only to crash to 154,000 by Friday amid Trump's 100% tariffs threats on China, triggering a 28 billion liquidation bloodbath across the board. Ethereum's followed suit, dipping 5.8% to $5,380, while altcoins like Solana and XRP plummeted 15 to 30%. This wasn't isolated. Global stocks tanked too, with the S&P down 2% as trade war fears escalated. But resilience shines. BTC is rebounding to $169,000 as we speak, proving October's historical 21% average gains in 9 or 11 years. EFT mania is fueling the fire. Global crypto ETFs saw record $8.8 billion Australian inflows last week, led by BlackRock and Fidelity. That's institutional money betting on big on recovery. Morgan Stanley's landmark move opens crypto access to all clients, including IRAs and 401ks, starting October 15, a huge step for mainstream adoption. Partnerships abound. Galaxy's Texas BTC mining expansion, Ethereum's scalability upgrades via layer 2s like Optimism, and even Trump's alleged crypto profiting ties adding political spice. Tech advancements. BitGet's report shows 66% of users planning more investments driving global growth. Bybit's analysis highlights derivatives fragility post-crash with ETH skew turning bearish but BTC perpetuals lagging. Central banks are whispering about BTC reserves by 2030, per Deutsche Bank, positioning it alongside gold. In Japan, Prime Minister Takaichi's pro-crypto stance could spark Asian adoption waves. Strategies 5.77 billion Australian dollars unrealized BTC profits exemplify corporate treasury strategies. Overall, its volatility meets opportunity. Who's scooping up discounted sats? Share your global hot takes. Time to go under the hood with some serious analysis because understanding the why behind the moves is what separates traders from gamblers. That Trump tariff bombshell, it's a macro disruptor, amplifying BTC's digital gold narrative in uncertain times. With US deficits soaring and bonds faltering, investors are rotating to alternatives. But crypto's leverage amplified the pain. 170 million Australian dollars in BTC longs liquidated alone. Compare this to past crashes. 2022 bear market was regulation driven, but this is geopolitical, potentially shorter lived if talks de-escalate. Vinex Matthew Sigel predicts $952,000 BTC if it captures millennial gold demand, backed by a generational shift where younger investors prefer digital over physical. Locally, Australia's regs could insulate us, attracting stablecoin hubs and buffering shocks. Risks: over leverage persists, with derivatives open interest hyper bybit. On chain, hodlers are accumulating with wallet growth signaling bottom formation. Technicals: BTC is testing 200-day EMA support at 148,000. A hold could propel to 192,000 resistance. Global implications: emerging markets like India could see BTC as a hedge against currency devaluation. For alts, ETH's reversal skew hints a caution, but DeFi TVL rising suggests rotation. Raoul Pal's view of a 5-year-old cycle peaking Q2 2026 aligns with institutional slow burn. Bottom line, this dip's a shakeout, with seasonality and liquidity pointing up. What's your analysis? Debate in comments. Knowledge is power in crypto. So let's expand our educational toolkit. Remember, I'm sharing passion, not advice. Always Dior and consult experts. First, blockchain deep dive. At its core, blockchain is a distributed ledger, like a shared Excel sheet no one can tamper with. Each block holds transactions hashed and linked. Proof of work secures Bitcoin via mining, solving puzzles to add blocks, compared to Ethereum's proof of stake for energy efficiency. Real use: supply chains. Track coffee from farm to cup, reducing fraud. Investment strategies: diversify 60% BTC for stability, 30% ETH for smart contracts, 10% alts like Sol for growth. Dollar cost average: buy $100 Australian dollars weekly, regardless of price, to average out volatility. Risk management: set stop losses at 10 to 20% below entry. Use only disposable funds. Examples: during 2022 crash, DCAs recovered faster than lump sum buyers. Consumer protection: scams abound, phishing sites mimicking exchanges, pump and dump on Telegram. Red flags: unsolicited DMs promising riches, guaranteed returns. Protect with 2FA, hardware wallets like Trezor, and tools like Etherscan for transaction verification. Aussies lost 200 million Australian dollars to scams last year, report to ACCC. Resources: Coursera's Princeton course, Khan Academy's Crypto Basics, or cryptologics.com.au's free e-guides. Advanced: dive into DeFi with Uniswap tutorials or NFT minting on OpenSea. What's your top tip? If this deep dive has ignited your crypto spark, don't stop here. Zoom over to cryptologic.com.au, your ultimate Aussie crypto companion. We've got exclusive deep dive articles on today's topics, interactive forums for community chats, free downloadable wallets guides, and Melbourne meetup calendars. Plus, premium tools like real-time Australian dollars price trackers and regulation updates tailored for locals. Subscribe for newsletters that deliver insights straight to your inbox. It's where passion meets practicality. Huge thanks for joining us on this journey. If you're bullish on the rebound, like now, subscribe, share with a skeptical friend to spread the revolution. Bold prediction: BTC hits 222,000 by year end. What's yours? Shout it out below. Top ones featured next. This is Sash from CryPTOLOGIC reminding you, in Satoshi's vision, trust is decentralized. Let's embody that. Stay inspired, stay revolutionary.